So, what coffee company could make you thousands of dollars? Comment down below if you could guess the stock by the thumbnail. So, the company that could make you thousands of dollars is Starbucks. So, if you guessed Starbucks, good job, you were right. Do you guys drink coffee at Starbucks or do you own Starbucks stock? If so, comment down below. Make sure to sign up with my Webull link in the description below and get yourself some free stock. Anyways, so Starbucks' current market cap is $105.55 billion. Their 52-week high is $115.48. Their 52-week low is $88.19. Their earnings per share is $3.74. A way you can tell if a company is profitable is by looking at their earnings per share. They pay a quarterly dividend of 57 cents or a dividend yield of 2.45%. Now, looking at their annual revenue, in 2019 they made $26.51 billion. In 2020 they made $23.52 billion. In 2021 they made $29.06 billion. In 2022 they made $32.25 billion. And then in 2023, they made $35.98 billion. Just in case you don't know what revenue means, it's the total amount of money a company earns from goods and services sold. Now looking at their annual net income, in 2019 they made $3.59 billion. In 2020 they made $924.7 million. In 2021 they made $4.2 billion. In 2022, they made $3.28 billion. In 2023, they made $4.12 billion. Just in case you don't know what net income is, it's what a business or individual makes after taxes, deductions, and other expenses are taken out. According to 38 analysts, 29% of them are saying to buy Starbucks. Now, what price target do analysts see Starbucks at? For the 1-year price forecast, the average price target is $107.15, with a high estimate of $127 and a low estimate of $95. Now looking at Starbucks on the technical analysis perspective, the current support level on the daily chart is $91. The current resistance level on the daily chart is $98. Support and resistance levels are important because they help when to enter in a trade and when to exit out of a trade. That's why it's important to have a game plan using support and resistance. Try to be realistic where your support and resistance levels are at, so try not to overextend your support and resistance levels. What makes this a convincing buy is that there is an inverse head and shoulders pattern forming on the weekly chart. You can see that Starbucks is starting to form that second shoulder, which could mean a reversal to the upside in the coming weeks. Just in case you don't know what an inverse head and shoulders pattern is, a inverse head and shoulders is a chart pattern seen when a security's price falls and rises 3 times to form 3 successive troughs, the second of which is the deepest. If you look at the previous days of Starbucks on the daily chart, you can see that it performed a triple bottom pattern, which led to a huge reversal to the upside. So what is a triple bottom pattern? A triple bottom is a bullish chart pattern used in technical analysis that's characterized by 3 equal lows followed by a breakout above the resistance level. Basically, the formation of the triple bottom is seen as an opportunity to enter in a bullish position. Sometimes it's best to look over a stock and see how it's done in the past, because sometimes history can repeat itself. Now, what could happen these upcoming days is that Starbucks could tumble a bit more to the downtrend, and just maybe it could touch that support level of 91 again and possibly form that double bottom pattern. If this does happen, then we could see a reversal to the uptrend. Now, looking at this with the moving average indicators on the daily chart, you can see that Starbucks has broken through the 20-day moving average. But earlier that day, it tried breaking through the 50-day moving average, but got rejected, which caused for Starbucks to tumble. If you look at the past days, there's been at least 2 times where Starbucks price action got rejected by the 200-day moving average. So what is the 200-day moving average? Basically, if the stock's price moves below the 200-day moving average, it signals we're entering a downtrend. If the stock's price moves above the 200-day moving average, it signals we're entering an uptrend. If you look close at those 2 times that Starbucks got rejected by the 200-day moving average, you can also see that a double top pattern occurred, which caused for Starbucks to tumble. So what is a double top pattern? A double top is an extremely bearish technical reversal pattern that forms after an asset reaches a higher price 2 consecutive times with a moderate decline between the 2 highs. Basically, if a stock touches the second top of the double top pattern, it signals a trend to the downside. In other news of Starbucks and Bank of America roll out coffee and cashback rewards. Starbucks and Bank of America began a joint rewards program on Thursday aimed at retaining tens of millions of shared customers, the company said. Any of Bank of America's 45 million cardholders who link their accounts with Starbucks rewards accounts will get 2% cash back for purchases at the coffee chain, the company said in a statement. For every $2 spent at Starbucks, customers will get an extra star to trade in for drinks, food, and other products. Starbucks loyalty program, which began in 2009, has about 34.3 million rewards members whose purchases account for a majority of its U.S. revenue, according to the company's fiscal first quarter earnings. The partnership with Bank of America is meant to bring value and utility to participating customers, said Ryan Butts, Vice President of Loyalty Strategy and Marketing at Starbucks. The deal adds to Starbucks' existing joint program with Delta Airlines. In November, the coffee company said it would announce 2 rewards partnerships, one of which is the Bank of America tie-up and another with a world-class hospitality company that yet has to be announced. This could literally be a game changer for Starbucks because with their already existing rewards program, this joint rewards program with Bank of America could bring in more revenue into Starbucks. Now moving forward, what would happen if you had invested into Starbucks for the long term? Let's take a look. Let's say you invested into Starbucks for 10 years with $1,000. Then let's say you contribute $500 into Starbucks monthly and reinvested your dividends to buy more Starbucks shares. By the end of the 10-year mark, your investment of $1,000 would now be worth $107,528. That is insane because all you did was hold on to Starbucks for 10 years, reinvested your dividends back into Starbucks, and let Starbucks do all the hard work for you. Now, if you had invested into SPY for 10 years with a small investment of $1,000, then let's say you contribute a monthly amount of $500 and reinvest your dividends to buy more SPY shares. By the end of the 10-year mark, your investment would be worth $129,933. That is just insane because all you did was hold on to SPY for 10 years, reinvested your dividends back into SPY, and let SPY do all the hard work for you. This is the power of long-term investing. Meanwhile, if you had invested that money in a savings account, it would be nowhere what Starbucks or SPY could have given you over the 10-year mark. But what does everyone think about Starbucks? Do you see them having a good future, or do you think they will struggle? Let me know in the comments down below. This concludes the video. Hopefully you guys enjoyed it. Get yourself some free stock when you sign up with my Webull link in the description below. As always, guys, take care, and I'll see you in the next video. And as always, this is not financial advice. Alright, take care everyone. Bye.